This is gonna be a little vlog for you guys. Literally just woke up. I plan on. My hair is like so crazy right now. Probably finna go pray and probably just get in the shower, and then you guys are gonna see just like what I do. Today's Sunday, so I don't have school, so it's just gonna, you know, just be whatever. Just go with the flow, because I don't really have plans for this weekend. I don't really have plans pretty much never. But yeah, that's pretty much all. Fit for today. I can't switch the camera because I'm on just iPhone shit. But white tee, some socks, some baggy pants, and yeah, that's what it fits good. Speaker. I forget about the speaker. Quality's probably gonna be a little bit worse in here. My mom's nothing specialist. Alright, let's get to the charts. Alright guys, welcome back to ASR. This is the January recap. I'll be breaking down two trades I took during the week. And I am, for this whole entire month, I am 11-2. So yeah, that is a really good win to risk to reward ratio. And probably some things I'll be talking about is just overall just patience with things, man. I mean, like you're not gonna win trades with not being patient. And patience can come from any line of any field, just anything that you do. And I think that's just one of the things that a lot of traders are missing is one, patience. Two, just waiting on the right setups. You can't come in on a setup with one or two confluences. While you can, that's just super risky, and you probably will get a very good entry than rather if you wait. It's just way better just to wait and fall back into that patience category. Another thing is, let's go back to the patience thing. Is if you don't see a trade for the day, don't even trade, man. I mean, a lot of you guys are. I see a lot of people on TikTok, Instagram. They just like force so much stuff. Well, don't listen to me. Don't listen to me that I said this, but it's just a lot of people force a lot of these trades, and they're wondering why they don't work. Well, I mean, it's not working because you're forcing it. I'm like I can maybe find an example. This is the month that I was talking about right here, by the way. Let me see if I can find an example where that might not have worked. Right here would maybe be a good example, because you can see on this hourly right here, on this hourly, this is market open, by the way. This is this is Friday. Last Friday. We have this fair value gap right here. We respect the fair value gap, get an up candle out of it, but we don't. You need for a fair value gap, you need an up candle out of it. No fair value gap candle out of it, and they're still inside the fair value gap. Now, some people probably would have been eager long right here, targeted these highs, this trend line liquidity right here. They probably would have had their stops underneath. Probably the first either right here or right here, and they would have got stopped out right here because it just didn't work. That's a decent example. But yeah, you guys just have to stay vigilant because these markets, they move very fast, and they're not going to wait on anyone. And you just have to be patient. All right, and some more things we can talk about is, let's talk about this trade I took on Friday. This trade I took on it was Friday. This trade I took on Friday. We didn't really have an SMT divergence for this whole entire day, so it was kind of just off knowledge, because SMT is probably one of the best confluences you're gonna learn. Probably liquidity and SMT is probably gonna be one of the best things you guys will ever learn. And the trade I took on Friday, I took it on NASDAQ, because you can see, even though they both right here, they both sweeped, NASDAQ was looking a little bit more bearish. And another reason, another good tip for you guys is clicking that, maybe missed that. What's that saying? It's going on Forex Factory. This is a very good economic this good economic news chart. Is we can see this right here, core PPI. This is a leading indicator for the government, and basically just stuff in general. We got PPI right here. We got both core and PPI. Even though this was delayed, I feel like this can still affect markets. Actual right here. This actual right here, if this actual is more than forecast, remember this, guys. The actual has to be more than forecast, and that means it's going to be good for price, good for our price. Let me rephrase that. It's not going to be good. It's going to be good for price, bad for stuff like NASDAQ and ES. Now there are some instances where this could be good, but most of the time it's going to just automatically give you buyers. This came out at 7:30. Market opens for me at 8:30. So this is a really good indicator that today we're going to be bearish, and that's what ended up happening. Right, let me go over that trade with you guys. But this is usually where I get my daily bias from. I don't get it from charts, even though charts is a good way. I just like news. I just like trading news way better. I feel like it can be risky, yes, but if you're waiting and you're patient, I feel like news is one of the best things that can happen to you. Right. So before anything, we get this liquidity sweep right here. We get this pre-market liquidity sweep. This is telling us, one, we have the chance to reversal. We have a chance for reversal, and we also enter in this fair value gap right here, which have another chance for reversal. So we're kind of doubling up. And then we didn't sweep out these highs, but we did sweep liquidity. Now, what do we do right here when we sweep liquidity? We go down to a smaller time frame. Swap liquidity on here, swap liquidity on ES. There's no SMT. You just scale down. That's pretty much all you're doing. You don't have to go to the 15-minute. You can just look like me if you want. And going to the 15-minute, everything still looking good. Now I'll show you why I came in right there. Just give me 1 second. Look for SMT. Look, boom, 15-minute SMT. We have a 15-minute SMT from dude, where's my brush? Yeah. Oh, here's my brush. Okay. Right. Boom, we have a brush. Yeah, just forget about me. Alright. These highs to these highs, and we have another SMT from these lower highs to this higher high right here. So boom, this is a really good SMT. You can see ES swept out this high right here. NASDAQ did not sweep out this high. That's basically what an SMT divergence is. Just not being broken down and all that. That's just what it is. When the one index sweeps out a prominent high and the other index does not, you usually want to come in on whichever one your daily bias is going towards. And then when that happens, you could pretty much scale down. I came in a little bit before that happening. That was a really good confluence that just happened to happen. Go down to the 5 minute. We have some even more SMTs, looks like it. But we have this right here. I think I might have scaled down to the 1 minute right here, just because I don't even think I came in right here. I think I came in. No, yeah, I think I came in right here. Right. I think I came in right here. I think it was like a. I don't know. It was just because I got my news bias. Boom. I don't know. It's kind of just an intuition type day, but you could add a really good trade on there, even if you're just going off what I say or what someone else says. But news bias is really good. I think a lot of you should probably keep that up and just try and evolve that. Right. So we have this high right here. You could even scale down to 1 minute. This 5 minutes not really giving me anything. I mean, we didn't come into this fair value gap right here. We did fill this fair value gap right here. Order block and not really an order block entry. We do have this breaker structure, so we're gonna have to come in on the 1 minute. That's pretty much what you're doing with all these days. You're just scaling down more and more, trying to find where you can come in. Alright, looks like we have this pre-market. Alright, market open right here. Pre-market sweep. Wait, market not open right here. Market opened. Market open right here. We got this whole entire thing right here is a high time for a pre-market sweep, pretty much. So we get this pre-market sweep right here, and then we get a sweep of these highs, go down, boom, boom, nothing really right there, and then boom, we get this sweep, we get this up, sweep this. This is where our SMT right here. So right here probably would have been optimal entry. I don't know if any of you guys trade at 9 or 10. I used to trade from 8:30 to about maybe 11ish or 10:30. Yeah, right there. Yes. Yeah, that's where SMT was. So that would have been a decent entry right there. We get this sweep right here. We get this sweep of this trim on liquidity along with the SMT. It doesn't look like we get a retrace in anything. Yep, we get a retrace right here. See, this would have been a better entry for me. This would have been a way better entry. Made an entry right here because we just got this SMT, right? We just got this sweep. ES swept out this. Nasdaq didn't sweep, but we still got smooth trend on liquidity. So this would have been a really good day. We have a fair value gap right here, and you would have came in after, not at the tip of this. You would have came in after it filled this fair value gap. It doesn't have to fill it whole, not all the time. It doesn't have to fill the whole thing. And then this down candle out of the fair value gap. You never want to wick it. And if you guys didn't know, if you're just watching this for the first time, when I say wick, I'm usually referring to these little wicks right here. So we usually have a full candle like this. This is a full candle, and then you'll have wicks like this. And this wick is basically telling you that price was right here at one point in time, but then we came back down here. Now it could be a number of reasons why it comes back down. That's just what it's telling you. It's telling you we came up here, but now we're back down. Now I don't think. Have you ever? I'm acting like I'm new to this. I'm not really that new to this. Right, there we go. Right. Now, this entry right here, this would have been an optimal entry. Probably, this would have been a better entry for me. Cursor, focus, and then get rid of this real quick. And then you probably would have had stops. Your stop could have been either the top of this for value gap if you're de-risking for the day. I don't know why you would de-risk and you have all this confirmation confluence. You have all these confluences, but you can set it to this top of the fair value gap. You can use continuation confluences for your stop loss. You don't just have to use that. And then you could have had it up here too. That wouldn't have been a bad idea. but it would probably, if you're de-risking for the day, you most likely want this type of stop loss. If you're not that big of a trader yet, you're just coming in, this wouldn't have been a bad stop loss. It's totally perfect. You can see it never hit. After this, you want to target the bottom of liquidity zones. Now, liquidity is basically just resting orders waiting to be filled. It's not that hard of a concept. It's kind of hard to spot a little bit, but it's not really that hard. Once you guys start getting into it, you'll know. It's, now we have liquidity right here. We have liquidity right here. So this could have been take profit one. Another thing about you guys is if you're just coming into trading, moving your stop loss right here to break even. Break even is basically just saying it doesn't matter. You're gonna come out pretty much even it's just saying you're basically putting yourself in a safe position to where price basically only win. And if price does come up here, it's gonna immediately take you out, and you're gonna be in a break even kind of situation. And you probably want to move stops right here. This, you can see we went down even lower, as low as these London lows down here. So this wouldn't have been a bad trade. This actually would have been a really good trade. Okay, scale down here, maybe even to this fair value gap somewhere in there. That could have been. But yeah, this is a really decent trade you guys could have took. If you guys have any questions, don't be afraid to type in the comments. I might have my Discord in the bio. I might have my Instagram, just in case you guys want to follow me on Instagram. I'll be posting on there too. I have a TikTok I post on. If you guys have any questions about fair value gaps, highs and lows, I know I didn't really talk about highs and lows. We have indicators. We have what maybe all this stuff may mean. What any of this stuff means. If you guys have any questions, any video suggestions you guys want to do, especially on weekends like this, I could probably maybe do 2 videos, maybe 1 video about what someone typed in the comments. I could do that. And also this sound in the background that you guys are hearing, I could turn that off too if you guys can't really hear me that well. But yeah, that's gonna be basically it. No face cam for today because I don't know, OBS is being kind of weird today. But yeah, some couple tips for you guys before you head off. Just stop forcing trades. Just wait for your confirmation and don't revenge trade. That's my January study recap. If you want to follow me, if you want to follow the journey to ASR, to me becoming funded, me becoming my independent trader, me buying a house, me doing everything, make sure to subscribe and join the journey. Get your OG seats while you can. Alright, that's gonna be it for you. That's gonna be it for you today, guys. See you later.